Hey, it's Sasha Evdokov, and today I'm proud to introduce to you my brand new book, 245 Money-Making Stock Chart Setups, Profiting from Swing Trading. Now, this book is different from some of my other books and probably different from many other books out there because it's a picture book. There's not a lot of writing in it. It's all about stock charts. Now, before I get more in detail into the specifics of this book, I do want to let you know I have a special offer if you decide to purchase this book towards the end of the video, so stick around for that. Now, how this book is different from some of my other books is that it's really all picture oriented. Now, my first book really focused on just tips with paragraphs explaining the tips. This was my book, 100 Stock Trading Tips. And this book's a lot thinner and a lot smaller, as you can see. So it was only about 110 pages or so. My second book, which is going through its second revision at the moment, or second edition, Start Trading Stocks, is really more of a guidebook to get you started. And even that book is still a little bit smaller than this book. So you can see it's about an inch smaller. Now, this book, 245 Money-Making Stock Chart Setups, is really all about charts. It's about finding and looking at charts that make you money. It's about telling you when to enter the trade, when to exit the trade. What are you looking for? What are you spotting? What am I seeing? What are the trend lines? What are the ABCD patterns? It's about looking at these charts and seeing charts that are ready to break out further. So if you train your eyes, if you train your brain muscles to spot these charts that are, ready to break out, then you'll be able to spot when the correct entry points are. It'll give you some insight, it'll give you some ideas of things to watch for a quality and healthy chart. Now, if you do that and you do it more often, keep studying, you'll be better at spotting these charts and you'll be better at spotting your entry positions when it comes to real trading. It's kind of like a tennis player that's building up their training muscles to be able to hit the ball properly, or a basketball player looking to make the appropriate shot. You're building up your muscles. You're building up and training your muscle. And the same thing here, you're training your muscle to spot these charts. You're training your eyes to spot these money-making charts. So let me share with you some of these charts and take a look at these types of pages that are actually directly in the book. So this is what it looks like when you're actually flipping through the book and looking at the pages. These are actual charts from the book that you'll be able to see and read and study over time. And it gives you an example of what's inside the book, because this is 90% of the book. It's not a book really that you read specifically like chapters like another book. It's a book that you're looking at charts and reading the charts going from left to right. So let's break one of these charts down. Take a look at this example of EAT, or Brinker International. So here you can see that we have an ABCD pattern starting to form because I've outlined the A with the circle here. As we slowly start moving left to right, you can see that there's a footnote in the volume section, that this is a good amount of volume. The stock is moving upwards and lots of people are buying it. So you can see that the volume is increased. Now, most of these footnotes are shorthanded or shortcut because I didn't have enough room to write paragraphs. So if there are annotations in a paragraph form, it might be to the top left, like in this example, about the chart or some critical points I want to hit, or to the lower right of the chart, wherever there's some empty space. So as we continue reading the chart, you can see the A to B has formed. And there was no point in there where I mentioned that you had to enter the trade. So as the A to B is formed, we have our retracement of B to C. You can see that right after the B to C right here, looking at the bottom, the volume starts to contract here. And this is where you can see the retracement. So first we went on heavy volume and then we are retracing on lighter volume. So far this is a quality-based move based on the ABCD structure. And especially you would know this if you've watched and studied my green course, because we do cover the ABCD structure in that course. Now, looking further in this chart, you can see that right here I mentioned that this is where you get in the stock, is after it breaks the resistance point of point B. So there's your entry point annotated with the arrow. And you can see that towards the bottom, volume is starting to pick back up and rise again. So you can see that this stock continues further up to point D. And from point A to B should equal point C to D, as you know, based on the ABCD structure. I've also noted that somewhere right in between point C to D, you should be selling some profits into strength. So there you have a quick little insight of how to read a very simple chart in the book, or the way that it's meant to be read. Now, this is a simple example. I do want to share with you one more example that's a little bit more complicated. So bear with me. If you don't get it, you probably will need to study some of the earlier examples in the book that are a little bit more simple. But here's an example that's a little bit more in-depth and a little bit more complicated, annotated with a lot more things. Here in this example, I have IGTE. And this one's just a little bit more complicated than the last one, so I do want to run you through it. So as we start, we take a look at the year 2013. Now in March, April, and May, we have this stock declining or descending with large bearish volume, which tells you to be patient here in the lower volume area. As we progress, you can see that the descending trend line was broken, and there's your entry point. You can see in the volume area, the bullish volume was increasing with a large spike. So as we continue upward, and that was your entry point, as you continue, you'll slowly see a little bit of a confirmation of the move because you get another volume spike. And you can see it was higher than the previous bullish volume spike. As you continue to August and September, this stock consolidates slightly. And you can see a volume retracement there a little bit. But then you get another point where volume has a nice surge, and this would be an adding opportunity if you choose to do so. As you continue, again, it continues on its stair-step pattern. The stock moves up, consolidates here in mid-September to October, and then you get another huge, more good bullish volume coming into the stock, which creates another adding opportunity. As we progress, volume slowly starts to descend from those previous highs, but it still has nice high positive volume over the bearish volume. So again, as the pattern continues, there's another adding opportunity. Now, throughout this whole process, you can see that we've created an accelerated trend line. So you always want to be selling some into strength. Typically, you'll sell some into strength right after this large little pops, and then you can add those shares back in after those consolidations. But when this accelerated trend line is broken, which you can see here, this is the point where you exit because the trend line is broken, and it's annotated there with the arrow. And it's noted also in the volume area that danger, bearish volume increasing and spiking. So that's how you would run through this trade example. Now again, this would be a medium level trade example. We do have another example that's a little bit more intense or more in depth, and I'll show you that one right here, as you can see with FSLR. You can see there's a lot of annotations in there and a lot of things to read. Now this one does take some time, and you will have to go through some charts to build up your eyesight to be able to spot these things, but it will take some time to read through this chart. There's some other ones in there that are more complicated as well. GMCR, for example, also has quite a few notes and annotations, and it will take some time to go through this chart to understand it, but I know that you can do it if you just take the time to read it. But I hope these two examples kind of illustrate to you how this book really works, and it's really focused on pictures, because I find that people are a lot more visual learners and they need to see things and they want to see the right setups. And that's what this book does, is it gives you ideas and concepts and things to watch for healthy stock charts. Now this doesn't mean that stocks can't go up if the charts are unhealthy. What this book does is gives you a higher probability of spotting the right kind of charts and the right kind of setups, so that way you have more things in your favor prior to the breakout. So I hope this little lesson was helpful. And if you're interested in getting this book, You can get it on Amazon by just searching for it, 245 money making stock chart setups. Now, if you want to get a quick access to it, you can also get it direct linked from my website at TradersFly.com. Okay, so now for the bonus. If you do purchase this book and you do a review on Amazon, I want to give you a free 30-day trial to my Critical Charts membership on my website. So what is the Critical Charts? Well, it's very similar to what's inside this book. It's the charts that I'm watching in the current market conditions that are also annotated. Now, they're not annotated to the extreme that these charts are, because these charts have already ran through their process, through their money-making timeline. Whereas the current charts in the Critical Charts, I'm looking at the charts that are getting poised to set up. They're getting ready to break out further, or they're getting ready to break out lower, or it might just be some thoughts or insights of these stocks that I'm watching. And it's usually about 10 to 15 charts that I'll post maybe a couple times a month. So in order to get that free trial access, all you need to do is, number one, purchase this book. Number two, do a written review on it on Amazon. And once that's done, go ahead and forward your Amazon receipt to this email address along with your review. That way we can verify the receipt with the review. And that usually takes about 48 to 72 hours. And once that's done, because they have to match up, once that's done, then I'll send you the link to where you can subscribe and register to the Critical Charts. Now, you will get free 30 days in the system, but after that, you will be billed at $12 a month. So if you don't want to be billed, you don't want to be charged, just cancel it before that time period. But this is just the easy way that we can set up the system without doing crazy programming or coding to where you're purchasing the book off of our website and you're automatically subscribed. It's just easier that way. So that way I can spend more time focusing on creating better content and information rather than just, paying programmers to do all this work. So if you want this bonus, just go ahead, purchase the book first, and then do the review on the website on Amazon second. Once that's done, just forward your receipt and also a copy of your written review, whether you take a picture of it with your cell phone or whether you copy and paste it, and then we can match it up with the name on the review to your receipt. And that way we can check mark it off the list, and we'll send you the link to where you can register for the access. And of course, if you don't want to continue the access after 30 days, just cancel it within the 30-day period, such as 27 days, and then you won't be billed. So that's how you do it. I'm proud to announce this book. If you're interested in this book, go ahead, check it out on Amazon today, or go to my website at TradersFly.com and you can purchase it directly from there. Thanks again for watching, and remember to do what you love, contribute to others, and most importantly, live life abundantly. I'll see you next time.